All right, let's go. All right, welcome everybody. Good to see you again. Today is pretty crazy. Hopefully you were able to trade. I was able to take a couple in between calls here and there. Uh, yeah, it's one heck of a day. Let's get into it, straight into it, okay? All right, so we're gonna look at what happened today, and then kind of talk through what I anticipate for tomorrow. So we're looking at the weekly chart right here, right? So as expected, the week started, and we saw it move up, and we saw it just barely miss. Let me take this out here, but just barely miss that weekly consequent encroachment of this wick here. So that gave me some promising insight that this is probably going to go down. So, and go down we did. We ended up going all the way down to a couple of lower time frame objectives there. There's still a little bit left further down here. We'll get to those in a moment, but on the weekly, this is what we were expecting, and to close the week out, I fully expect for us to either go down and take out that outstanding liquidity, or maybe go up first and take out some more of that just form. We'll take a look at that in a moment on the daily. So on the daily, let's take a look at this. So we have this range that we've been in, this dealing range. I'm going to make it a little bit thinner here so you can see. We traveled up, still keeping in mind that monthly SIBI that we've kind of like been playing around with over here, and then we rejected. So here, this particular week, we know we didn't want to hit that weekly level if we were going to be bearish. And this past day, let's take a look at what happened this past day. So this past day, we ended up going for yesterday's low, rejected it in the morning, and then continued to sell off in the afternoon. And then we actually retraced quite a bit. So what was our draw? So our draw, we had this SIBI high and this SIBI low. So it was this sell side imbalance, buy side inefficiency that we were looking for, or sorry, buy side imbalance. This thing here was what we were looking to. Now we did notice that there was a bullish order block there. So keeping that in mind, that particular order block is a huge order block. So there's a lot of room there to go. So we knew that the draw was towards the bottom of this, or rather this fair value gap in general. We weren't sure exactly how far down, but let's take a look. One new thing that did form here. Now, I want you to keep this on your charts as well, because it's going to be important for tomorrow. So we may or may not trade back up to that just yet, but we did create this new sell side imbalance, buy side inefficiency here. So I think it's going to be important for us to note that in the future. And moving forward into tomorrow, we see that we've already sold off quite a bit in Asia. It's already given up 30 points or so in Asia. So very interesting. I do believe that we've got some unfinished business, but what we want to be wary of is the consequent encroachment of this wick that now has just formed, because we did see a lot of movement from there. So roughly, that's give or take a little bit there. 15,222, we'll call it. So we want to make sure that we marked that 15,222, and we want to make sure we note that this is our consequent encroachment here. So we got that there. We're going to take this off and we're going to mark that as a 15,222 1-day wick consequent encroachment. So we have that for our lower time frames when we need it. So this I think we can still keep. This is that buy side imbalance, sell side efficiency midpoint, but I want to make sure that this is drawn out to the 8th, and it is. So we'll have that there as well. So yeah, on the daily, that's really it. We certainly still have some unfinished business. I could get this here, down here. That with that 1-day BISI low. If you look real close, there's also, so there's a new week opening gap down there, but there's also a tiny, almost negligibly volume imbalance on the daily. Now, that can serve as a draw, certainly, but am I counting on that? No. So we'll find out. So one thing that I do notice here is this daily bullish order block mean threshold. If we trade below that, then typically we're in for some continuation, maybe in the coming week, maybe not this week, but I think if we trade below that, we're going to start to aim for some of these lows here. So that's it on the daily. Let's take a look at the 4-hour. So here you can kind of see that we've been filling out this buy side imbalance, sell side inefficiency here. We ended up bouncing and respecting this fair value, or this old new week opening gap, and that premium breaker, that monthly premium breaker low. What does that mean? Well, we can see that we still created a lower low, lower high, lower low, lower high, kind of here, lower low, lower high. So we haven't broken structure to the upside, nor are we in any spot to even consider being in a bullish move. We've gotten to a hugely high premium on the higher time frames. So with this, I see that we can see that mitigation block I had alluded to earlier. Now I'm actually going to remove this one there because it's not a true mitigation block. It was not respected, but we have this here where we had sellers sell all the way down here, buyers bought back up, sellers dropped it all the way down. So we had a bunch of buyers that are looking to get out at break even. They're willing to sell here. So when you replay the price action for this, it's really fascinating, because when you look at the end of the day, price just literally wicks up there, maybe 1 point above, and immediately drops another 10 points. So lots of sell orders that we're trying to get out quickly. You have to pay attention to this kind of thing, because that is indicative of price action as well. Speed and velocity. So we've got that going on there on the 4-hour, and that was just something that I noted on the higher time frame. One thing on the 4-hour that you notice down here, relative equal lows, right? This blue shaded box is a 1 hour. Let's go down to the hourly just because we're going to go down that way. All right. Let's give ourselves a little bit more room. Okay, so we see that on the hourly, this is the mitigation block that it bounced off of and rejected. And right now in Asia, it looks like it's continuing to move south for the time being. I do believe that we take out these lows and hit the daily BISI low here tomorrow. So what I'm going to do is I'm going to move some of these over so we can actually see them. Okay. Let's move all these over just a smidge. And let's move these over as well. And I think that mitigation block isn't going to stay there much longer, but we'll leave it there for the time being. And then some of the buy side objectives we'll leave there as well. Just in case there's a bullish run of some sorts. So, yep. So I think you can see that we aimed for this BISI. It's an hourly BISI because you can see over here we played that. Now, one thing I did not note that I should have was that this, look at this candle's open. It's 15157.50. Now look at this candle's low, 15157.50. Kind of ridiculous, right? So that is something quite interesting. There's a volume imbalance there that I missed and should have had on my charts. That actually prevented me from hitting a much larger score than I should have gotten today. But that is water under the bridge. So, do I think that it's bullish? I do not see it as bullish yet. At least on the hourly, there hasn't been a... I mean, there technically has been a little, a short-term high here. We broke that, so it's possible that we continue upwards. But with the mitigation block there, hit pretty quickly, and the market price action in Asia, I'm led to believe that we are going to go attack these lows and eventually go down and attack these as well. Now, keep in mind tomorrow's Friday, so it's possible that the weekly range could retrace. So that's another thing that I'm keeping in mind as well. Let's go down to the 15-minute to get a little closer look at that, though. So on the 15-minute, a little clearer there, where you can see a low, high, lower low, mitigation block, and then continuation downwards. So let's see. I'm not holding my breath for anything. Yes, I do see some other gaps up here, but again, we're still in a pretty high premium on the higher time frame, so always keeping that in the back of my head. I want to see what kind of range happens in Asia overnight in London, and then see how that impacts where we end up going for the day. So let me move some of these a little bit further so we can actually refer to them properly when price gets there tomorrow. And yeah, so nothing too crazy. I think on the day's price action though, Asia, London, pretty large spikes, right? So unless you woke up pretty early, you were gonna miss some of these moves at 6 in the morning. There was a move before that 8:30 time frame there. So if you recall, today we had unemployment claims right smack dab at 8:30, and that caused us to go for this downside objective here. So if you didn't get in at this order block here, so you can see on the 15-minute, there's an order block there. It was respected and continued downwards. Now this also was the first touch of this mitigation block. So see how powerful that was. Right from that moment, it ended up rejecting there, continuing downwards. There happened to be a fair value gap here, bearish order block, and once it went down, it retraces to this order block and then off to the races. So that signature is very, very powerful, and then it started to just jack up the rest of the day and then eventually mitigated again. On the 5-minute, so on the 5-minute chart today, again, one of the best and easiest ones to see. There's a fair value gap here. Might not be able to see it as well, but it's right there. Let me remove it from my charts, but that was it. I mean, yes, you had some order block and mitigation block items here in the morning. Again, if you were awake, I unfortunately got started with the stream a little bit late, so I missed that entry. However, there were a few other entries there, you know, low, high, lower, low, and then a breaker right there. So this is a breaker that I would have also considered taking too. Right there. That's on the 5 minute. So you see how that's respected there? Very, very interesting. So let's take a look. It continues downwards and then begins the opening range. Now the opening range was a very tricky one. Very, very odd price action. Once you saw this kind of reject and bounce upwards, this creates a shift of market structure. Now technically there's one here too, but it wasn't, you know, so we have like a lower high, lower low, higher high, higher low, lower high, higher low. This was the more profound or distinct movement. So you would have had to have a large stomach to stomach this amount of risk to take this and take it all the way up, and you would have had to sit through a lot of up and downs. So very difficult on the upside as expected. So let's take a look at the 1 minute though. So on the 1 minute, similar. So as price happened in the morning, there's a fair value gap here. You can see range, 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 broken. Fair value gap. Right there. Price respects it. Breaks down. 7 a.m. hits. Breaks down. Keeps on breaking down. Keeps on respecting order block after order block. Fair value gap. Doesn't even get all the way up to the order block. Double top. Concept. Gives it up. Retraces a tiny bit. Gives up the rest of it. So, it would have been a little tougher taking these lower entries while it is possible. I always like taking the pristine ones that kind of give you a much, much more profound and distinct movement away from a very, very clear level that has been set as a kind of like faux support. So I think that was really important to see. If you were awake that early, great. And then once the price action started this morning, New York open at 9:30, we see it flush out and then spike up, give a market structure shift. When it came back down here, rejection block, and that bounced very, very profoundly up. So we have retracement to this fair value gap and then upwards. And then from that point onwards, it retraces back to this fair value gap here on the 1 minute. Very deep discount on this particular range too. And so this bottom one was kind of treated, I mean, it did dig into that lower one too. So it's one thing to really keep in mind is you can see that the lower low, higher or lower high, higher low, higher high, and then we have a little bit of choppiness down here. So it did retrace back to the discount. So if you had a limit order there, there's a discount. There's a new week opening gap there. There's a market monthly level there, breaker low, I believe it is. So lots of stuff to feel confident to go long there. And I unfortunately could not trade during that time. Needed to eat some lunch, get some food for my next meetings, and you can see the rest of the day. Silver bullet time frame, there's this gap that was looked at, this gap that was looked at, and it respected this one that was formed at 110 and then continued upwards, right? Towards the end of the day, notice that, remember, this here is a possible mitigation. It looks a little off right now because of how it's zoomed, but this is a possible mitigation block. It spiked up there and then just dropped and gave up and ended right at equilibrium. Look at that. So 15288.5. What is this closing at? 15289, right? Crazy. So that's kind of what happened today. I want to go back to the hourly chart so we can take a look and talk a little bit more about what we expect for tomorrow. So tomorrow, first thing we check, economic events. So really 9 a.m., 10 a.m., there's still more FOMC members speaking tomorrow rather. There is a 10 a.m. wholesale inventories, and that's about it. 3 o'clock consumer credit, but you should not be trading at that time. You should be done with your trading by that hour. And then from there, I think that's really it. We know our bias is still to the downside, but the expansion could be done at this time. So what does that kind of look like then? Well, if we're trying to anticipate that the weekly range has already run out of gas, well, what we can do is take what exists today and we can send it over here. We can take a look at the weekly wick because that's what we really care about. I think we need to draw Fibonacci. Oh, that kind of messed up that one. Let's create a Fibonacci here. And I need to see the high of this thing. Let's go find the high. It's right here. And there we go. Okay, so, and let me draw this out a little bit so it's a little bit clearer to see. Okay, so this candle, this black candle is our weekly range, right? We can see that if we are going to have, if that is truly the low, I don't believe it is, but if that is truly the low, then we have already done a weekly retracement into the 20 or 30% range. I don't like that very much going into tomorrow because I want to see a low formed on Friday with a retracement to that 20-30% range. If it starts here and just chops the rest of the day, well, it's going to be pretty quickly something that we see very quickly because we're going to see seek and destroy type of price action and stuff. That's something that we do not want to see. So I think that's really it. I think yeah, I don't have anything else for tonight. That's what I'm looking for tomorrow. See, we talked through those levels for tomorrow, and you know which ones I'm going to be looking at. So things that are on my mind right now. On the hourly, we want to see it not get above this wick too much, at most this short-term high. And on the downside, we can see that there's a hourly bullish order block here. So maybe it gets down to there before we buy up and go further towards this BISI, the new daily BISI. Remember, there's one new one that formed on the daily chart here. So now we've got this buy side liquidity here. We've got this premium BISI or SIBI low. It's a SIBI low. Oh, here it is, actually, right here. So we've got that draw. We've got this in this spot. So it's very possible it could retrace all the way up to there. We're going to keep pretty nimble tomorrow. There's no reason why it has to go all the way down and take out this daily imbalance. It doesn't have to. It can certainly retrace quite a bit first. But yeah, let's see what happens in Asia and London tomorrow, and then we'll decide what we want to do from there. So again, yesterday's market prep video, excellent for showcasing what kind of stuff we were looking for today. And for tomorrow, you know, there's a few different ways. I don't see a huge amount of like down day but I actually see that it could be a little more tricky on this Friday because of how far down we've gone, because of how far up we've also bounced. So I'm going to be careful tomorrow. I don't need to be risking anything else. I've risked one, maybe two contracts tops, which is $200 or $400 at a 10 handled risk. So I'm okay with that. I think these evaluation accounts are okay with that. And if you are, as long as you're managing your risk properly, then you should be doing okay. It's a probabilities game. How many of your plays come out? You only need maybe less than half to work over the course of time to be a winning trader. So I'll leave that with you for now, and gonna sign off here. Get some rest, and we will see you tomorrow morning, bright and early. So thanks a lot. Take care. Have a good night. I'll see you tomorrow. Good trading, okay?